not the week we expected. A president got elected that was projected to lose. A market that was supposed to respond negatively as a result is up at record numbers. I guess the question is, what's going on?
Yeah, it's been crazy. With the night of the election, the futures were down 800 points and sending panic into the financial markets. And Donald Trump had a nice speech at I think 1 or 2 in the morning, and the markets opened down a few hundred points and turned and rallied because there is a lot of good news in the sense a united president, united Congress could make things go smoothly and help with gridlock. And if he wants to build infrastructure, that will bring a lot of jobs and a lot of money into the economy.
So I guess the question is if that continues, if it seems to be that the government would be working again and things like that, is what we saw right after the election something that we should expect to continue next year?
I think there's a lot of euphoria right now in the sense of, let's go back a week when the market was breaking all kinds of key support levels, and it looked like, wow, this bull market could be coming close to an end, where now we're at all-time highs. There's been some studies done that show that it's pretty common to get a really good move right after the election. A lot of it is that, okay, now it's over, that uncertainty is now certain. The studies have shown that what happens now has no bearing what happens next year. We're going to have this euphoric feeling, and we may even have a nice little rally into the end of the year. A lot of hedge funds have underperformed, and they're buying, and they want to show some performance. But we have to, at some point, get back to the fact that interest rates are going to increase. Even if we do start increasing spending, where's the money going to come from? And, earnings just aren't. Revenues of companies are lower, and they're lowering guidance, and they're just not showing that this bull market can sustain for the long term.
So I guess you just answered some of that question, but go into what are the kind of things that investors should be looking at in making decisions as to whether or not the bear market is going to occur and the bull market again subsides.
We're still in no man's land. There's not a lot of volume out there. There's a lot of technology trading, computer trading, pushing the market higher. So for the investors, you've got to just stay the course. I wouldn't be jumping in, buying, going crazy. I sure wouldn't be selling either, because we just don't know where it's going to go and how much further this bounce has to go.
So Mickey, I guess the question is, what are you doing for your clients to get ready for 2017?
We're still staying the course, and we talked about this last week when the market was breaking support. I said that we want to wait to see what happens to the election before we start making any moves, but it looked at that point that, hey, we may have to get a little defensive. As of right now, we're now basically, on that offensive side where the market's going higher, so there's no reason to make any moves. The night of the election, I even sent out an email to all my clients saying, hey, the market's down, but let's wait and see what happens the next day. It's very common for markets to open down big and make a low early in the morning and then reverse, which is exactly what we did. So, 2017 is going to be a very, very interesting year. It's this has been a market that doesn't want to die. So I don't want to sit here and say we're going down. But I keep looking and saying at some point we're going to have to move to more of a defensive position for our clients as things will start to turn.
Do you think the Fed still raise rates before the end of the year?
I really do. Now that we have a new president, but it's interesting because Donald Trump has said he likes low interest rates, and he's turned around and said the Fed's crazy for keeping interest rates so low. So that's kind of a confusing statement. But the fact he has criticized them for keeping rates low, and let's face it, they want to keep their jobs. And so I really do think there will be an interest rate increase. And it'll be interesting to see, is this a one-and-done type rate or what they're going to say moving forward? That's the key. One and done, not going to affect the market too much. Moving forward with more rates, then we have something to talk about.
It'll be interesting to watch the next week. We'll talk to you then. In the meantime, how can people get a hold of you?
Anyone who has any questions about just the market in general or wants to talk about their portfolio, their allocation, or maybe what they're paying to their broker, they can contact me directly, Mickey, it's Mickey, at Envestim, ENVESTIM.com. They can also follow us on Twitter at Envestim1, and we have a Facebook page and LinkedIn.
Terrific, Mickey. Thanks always for your time. We'll talk to you next week.
Thank you, David. See you then.